China takes more of our soybeans than all other foreign customers combined.
China has just canceled 2.4 million tons of U.S. soybean shipment, abruptly rerouting that demand to Brazil. This sudden move wiped out $1.1 billion in American farm contracts overnight. In the middle of the Pacific, cargo ships carrying U.S. soybeans were ordered to turn around, leaving farmers and exporters blindsided and scrambling for answers. This was a precise, calculated strike timed just days after the U.S. imposed $90 billion in tariffs on Chinese goods. And Beijing didn't waste time with threats. It hit America where it hurts most, the heart of its farm economy, right in the middle of peak export season. But soybeans are just the beginning. Corn exports to China have crashed 49%. Brazil just locked in a new $2.6 billion grain deal. With over $8 billion already invested in Latin America's logistics infrastructure, China now controls 64% of its soybean import routes. This is a clear example of strategic realignment, and the fallout could trigger the collapse of the American farm economy. In this video, we unpack the deeper strategy behind China's sudden pivot, how it caught Washington off guard, triggered panic across the Midwest, and sent shockwaves through global markets. With real-time trade data and insights from Bloomberg, the USDA, and the Wall Street Journal, we examine how this move may mark the beginning of a much larger economic split between the world's two largest economies. So before we dive into the details, make sure you're subscribed, because the world nowadays changes too fast. When President Trump raised tariffs on Chinese goods by $90 billion, China didn't just complain, it acted quickly and quietly. Instead of using public threats, it made a sharp move where it knew it could hurt the U.S. most: agriculture. First, China raised tariffs on all American imports by 34%. The blow hit U.S. farmers hard, especially those selling soybeans, corn, and wheat. Prices for these crops dropped sharply, wiping out hundreds of millions in expected profits. Farmers in states like Iowa, Illinois, and Indiana began to panic. Shortly after that, a ship full of U.S. soybeans heading to China was turned around in the middle of the ocean. There was no warning or explanation. Then came the big hit. China canceled every remaining order for U.S. soybeans, which was over 2.4 million metric tons in total. That was worth about $1.1 billion. Major firms like Cargill and Archer Daniels Midland had already included that revenue in their forecasts. With deals canceled, silos overflowed with unsold beans, and prices dropped further. At the same time, U.S. farmers were already facing higher costs for fuel, fertilizer, and equipment. The sudden drop in demand pushed soybean prices down 3.7% on the Chicago Board of Trade, erasing $500 million in market value. Banks tightened lending. Farmers delayed purchases, postponed upgrades, and cut hiring. Even companies that support farming, like truckers, grain handlers, and fuel suppliers, were hit hard. China chose its moment well. March through June is the most critical period for U.S. soybean exports, when most contracts are signed and farmers earn the bulk of their income. By pulling out then, China caused maximum disruption. To justify the move, Chinese customs officials claimed they found fungus and pesticide issues. But joint investigations by U.S. authorities and the WTO found no evidence. Financial analysts called it a regulatory smokescreen, a political strike disguised as a safety concern. The consequences were far-reaching. Global buyers began questioning U.S. reliability. Shipping insurers raised costs. International buyers added restrictions or looked elsewhere. Even futures markets changed. Traders began pricing in political risk. Banks started factoring in trade war exposure when issuing farm loans. Other export-reliant sectors, like pharmaceuticals and rare earths, started wondering, are we next? This wasn't just a trade disagreement. It was a calculated act of economic warfare. By targeting time-sensitive exports, China inflicted major damage, without any official sanctions or announcements. And the danger isn't over. If China can suddenly stop buying soybeans, it can just as easily cut off lithium, rare earths, or medical ingredients. Behind the canceled shipments lies a chilling strategy: disrupt, destabilize, and dominate, without making a sound. For years, the US had the luxury of thinking that its position in global agricultural exports, especially to China, was secure. But we now see that the Chinese government will go to any length to ensure it does not depend on the US for anything. While it is true that China was once heavily reliant on American crops like soybeans and corn, it has been subtly but steadily building a parallel trade network, one that bypasses the United States entirely. The catalyst for this shift is Brazil. Between 2020 and 2024, Brazil expanded its soybean export to China by a staggering 48% from what it exported in 2024. Also, over 280 billion Brazilian reais real in Chinese-backed infrastructure flowed into Brazil, creating grain corridors, rail lines, and port terminals designed specifically to move goods to China. And make no mistake, this wasn't just about expanding Brazil's agricultural output. It was a strategic maneuver to re-engineer the global supply chain in China's favor, bypassing the US at every turn. By 2024, over 64% of China's soybean imports were coming through Chinese-financed logistics networks. Brazil alone now supplies nearly 70% of China's soybean demand, without the hassle of US tariffs or political interference. This is not merely diversification. It's a deliberate geopolitical escape route. China was no longer just importing soybeans. It was securing a food supply chain that it controlled, free from US leverage. And this isn't the end of the story. What comes next is even more alarming. In the first quarter of 2025, US corn exports to China plummeted in price and supply. In response, China signed a new supply deal with Brazil, replacing American imports. That marked a $2.6 billion shift in trade flow. At the same time, China offloaded 1.2 million tons of US corn from its state reserves, citing price instability. What we're seeing is not just diversification, it's decoupling. In April 2025, HSBC released a commodity outlook revealing that China had locked in grain supply deals with Argentina, Russia, Pakistan, and Brazil, covering over 70% of its grain and oilseed needs. Wall Street is starting to wake up to the threat. Analysts are now warning that China's moves represent the beginning of a systemic shift in the global commodities market. And while the US may still hold significant sway in certain areas, the fact that China is decoupling from US agriculture shows just how quickly the balance of power can change. Soybeans and corn may seem like simple crops, but they are extremely important to the US economy. These two crops bring in billions of dollars, feed millions of people, and support entire towns in the Midwest. More importantly, they are at the heart of American farming. Let's start with the numbers. In 2024, US farmers grew over 4.2 billion bushels of soybeans and 15.3 billion bushels of corn. The US is the largest corn producer in the world and one of the top 2 exporters of soybeans. Together, soybean and corn exports earn the US over $50 billion every year. And when you add in domestic sales and processing, these crops are worth over $100 billion annually. That's a major part of the American economy. But this is not just about money. It's about jobs. Farming soybeans and corn directly employs thousands of people and supports another 1.5 million jobs in related areas like shipping, fertilizer, equipment, and food production. In many rural areas, these crops are the only reason small towns survive. If the demand for these crops drops, it means job losses, closed businesses, and local governments running out of money. This hits the Midwest the hardest. States like Iowa, Illinois, Nebraska, Indiana, and South Dakota. In Illinois, for example, soybeans are grown on almost 10 million acres. These states depend on corn and soybeans to stay afloat. They also strongly supported Donald Trump in past elections. Because of China's retaliation targeting soybean and corn farmers, Trump is facing a political disaster. His support in farm states like Iowa is dropping fast. In key swing states like Wisconsin and Pennsylvania, he may lose just enough rural votes to cost him the midterms. farmers feel angry and betrayed. Many say they trusted Trump to protect their livelihoods, not destroy them with trade fights.
I was expecting the lower cost of a lot of just your everyday living things and hoping that he would make things better for everybody in America, because that's what we need.
This is more than just a farming problem. If soybean and corn farming collapse, food prices will go up, gas prices due to ethanol could rise, and thousands of jobs could vanish. America would also lose its place as a top global supplier of food and animal feed. That would be a major blow to the country's economy and its influence around the world. The most concerning thing for Washington is the fact that China is taking over relations with all neighbors of the United States. For years, the United States believed it had firm control over its own neighborhood, Latin America and Canada. These nearby countries were expected to remain aligned with Washington, both politically and economically. But that's no longer the case. China has steadily expanded its presence in America's backyard, using investment, trade deals, and massive infrastructure projects to gain influence. As a result, many of these nations are now drifting closer to Beijing and distancing themselves from Washington. Let's start with Latin America, where China has been spending a lot, over $137 billion since 2005. This money isn't just aid. China is using it to build real things: dams, ports, power plants, roads, and even 5G internet networks. These projects are not just about helping people. They're about gaining long-term influence. In Brazil, China is now the biggest trading partner, buying over $100 billion worth of goods every year, mostly soybeans, iron ore, and oil. In return, Chinese companies are taking control of parts of Brazil's power system. China, for example, spent over $51 billion building several infrastructures in Brazil, including a giant power line that stretches over 2,500 kilometers. China is also drilling in Brazil's oil fields through its national oil company, CNPC. In Argentina, China's influence is also growing fast. In 2022, Argentina joined China's Belt and Road Initiative, BRI, a global project to build trade and transport links. China promised $23 billion in investments, including an $8 billion nuclear power plant called Atucha 3. Many experts warn this gives China too much control over Argentina's energy system. Chinese companies are also building ports along Argentina's coast, giving them access to key shipping routes. Many of these countries are also joining hands with China in other ways. Brazil and Argentina, for example, are part of BRICS+, a group of countries working with China and Russia to move away from the US dollar in trade. Instead, they're using other currencies like the Chinese yuan to do business. These countries say they want a multipolar world, not one where the US calls all the shots. Now here's something that might shock you. Canada, America's closest ally, is also growing closer to China. While Canada is still part of the Western Alliance, its economy now relies heavily on trade with China, especially for food and farming. In 2024, Canada exported $30 billion worth of goods to China. A big part of that is agriculture. Canada is now China's second largest source of canola and third largest supplier of pork. It doesn't end there. China now buys 41% of Canada's barley exports and 31% of its peas, according to Canada's own agriculture department. If China suddenly stopped buying, Canadian farmers would be in serious trouble. The backyard isn't just slipping from America's grip, it's being rebuilt with bricks paid for by Beijing. So, what will Trump do about China's growing influence? Because what's collapsing isn't just soybean exports, it's America's grip on the future of global trade. And this story is far from over. We'll be following every move, every shift, and every shockwave. Make sure you're subscribed, because the next chapter could change everything.